Please see DGS's position and move.
Very good evening to everyone. Thank you for joining today's session on Trade Snapshot Policy. So it's the monthly update for May 2026. So without taking much time, sir, could you please welcome the audience and DG sir before we start?
Good afternoon, everybody, and thanks for joining this afternoon. As you're aware, FIEO, in fact, has commenced with the trade snapshots, where DG Sir, Dr. Ajay Sahay, will be giving you a gist of the public notifications and other issues which have been circulated by the facilitating departments. And he will also give you a small presentation as well as an update for the previous month. This is now going to be a regular feature. It's going to be held on the first Tuesday of every month, which may please be noted. And it will also have a gist of the impacts of these public notices, notifications, and circulars. So DG Sir will now commence with his presentation. Sir, if you are ready, can we commence with the presentation, sir?
I have already shared the presentation. Is it visible on the screen for everyone?
Yes, sir, it is.
All right. So first of all, let me thank everyone for joining us in this monthly update. The idea is to update the members about the various changes brought by different departments, including the DFT, Customs, GST, RBI, and update them on the implication of those changes. So let me start on a positive note. We are very happy that India's exports, after clocking a record growth of $863 billion into by different departments, including the DFT, Customs, GST, RBI. Is there any echo or it has settled down?
It was an echo, sir. Anything else?
Fine. So, in fact, if you recall that in the financial year 2025-26, we recorded an export of $863 billion, $442 billion in goods and $421 billion in services. The overall record growth was around 5%. We are continuing to build on this export growth despite very challenging times. In the financial year 2025-26, we recorded an export of $863 billion, $442 billion in goods and $421 billion in services. What's the technical problem?
Suhani, please switch off all chats which are open and then only open DG Sir's thing.
$421 billion.
Sir, everyone is on mute.
The technical problem.
Sir, there is continuous echo from your end.
Suhani, please switch off all chats which are open and then only open DG Sir's.
Sir, it is open. Sir, everyone is on mute.
All right. So,
Sir, there is.
what is the challenge then? Okay, we were talking about the India's good export performance in the financial year 2025-26, where we clocked a total export of $863 billion, $442 billion in goods and $421 billion in services. We are building on such a spectacular performance despite huge headwinds in the global trade, particularly the challenge in the Middle East. And the data for the first month of the fiscal year has come, which shows a very good growth of over 13% in exports. The good thing is that merchandise exports have clocked around 13.8% growth. Imports are also up by 10%. Services have also clocked around 13.2% growth in exports, and services imports have declined, with the result that overall India's export for the month of April have clocked around 13.6%, and imports are up by 8%. We have a little comfortable situation on the trade deficit. The trade deficit has declined by around $3.25 billion from $11.16 billion to $7.81 billion. We also have to see that the ministry is looking into fixing a challenging target for the current year. They are looking into a target of $1 trillion of goods and services exports. I've been given to understand that the data for the month of May, which has not been publicly released, also shows a double-digit growth in the month of April and May together. So we are starting on a good note. The need of the hour is that we continue to build on such a good performance. And while the situation remains challenging, we will have to steer our exports also. When we are looking into India's export performance, one thing is visible that we have been benefited by the increase in the price of many of the products, particularly the petroleum products, because crude prices have moved up with the challenges in the Strait of Hormuz, and petroleum products clocked around 35% growth. They have touched around $9.6 billion, and they are moving very close to India's engineering exports also, which has clocked 9% growth. And the electronics sector, thanks to the PLI scheme and the smartphone, we are continuing to do very well, recording a growth rate of 40%. In meat and poultry sector, we have seen a growth of around 48%. There are other sectors also which have performed well. The handicraft sector clocked 20% growth. Marine sector, which faced huge challenges in the US, they have clocked around 15% growth in export. The marine sector has quickly moved into the new market of Europe, Russia, China, Vietnam, Australia. Drugs and pharma and inorganic and organic chemicals are also showing close to 7%. To some of the destination also, we are seeing huge growth in exports, including Sri Lanka, which clocked 215%, Singapore around 180%, Tanzania around 160%, Hong Kong 90%, Bangladesh 60%, and Vietnam over 53%. These exports are overall pushing India's exports. And the good thing is that West Asia, which accounts for 15% of India's export, though the exports are down by around 28%, we still have been able to clock 13% growth in India's exports. So we are starting on a right note, and probably in times to come, as the situation eases out in Middle East, probably we will be getting the required momentum. We are very happy that the US team is in India, and we are working on the finality of the BTA between India and US. We are hopeful that before the deadline of 24th of July is over, when the 10% duty will cease to be in operation, we have to see that we have BTA in place so that a lot of uncertainty emanating from Section 301 action by the US can also be addressed. We also have an India-Oman FTA which has come into operation. Please bear in mind, though we have finalized the India FTA with UK, New Zealand, and EU, none of them have become operational. But with India-Oman, we have the FTA which has come into force from yesterday. The good thing is that India is virtually getting 100% of the goods duty-free from the day one. Also, roughly 99.38% of India's export will become zero duty, and it covers a lot of products, including engineering, pharma, agro, processed food sector, marine products, textile, chemical, electronic. Only in some of the agriculture products, Oman has provided a phased reduction in the tariff over a period of 5 to 10 years, and the total tariff lines in respect of those agriculture items are less than 200 out of 12,000 tariff line at 6-digit level. In many of the sectors in agriculture and processed food, including boneless meat, bakery project, chocolate, animal vegetable food, eggs, we have got the zero duty. And in many of these segments, the tariff in Oman is pretty high, though the MFN tariff generally in Oman is around 5%. But on some of these products, the tariff was as high as 100%, and therefore we will be getting better market access in the Oman market. But at the same time, we should be conscious of the fact that Oman total import is around $40 billion, and India's current export to Oman is around $4 billion. So we already have 10% share in in Oman market, and probably with the FTA, we will be able to increase it further also. The good thing is that in the services also, we have got good concession, and in many of the services segment, we will be increasing our base in the Oman market. The current import of services in Oman is around $12 billion. India's export is around $300 billion. So we have much more scope to increase our services exports. We have got 100% FDI in services, where there is no need to have an Oman partner in the services sector. We have very liberal mobility for the Indian professional also. The Indian professional will be given visa for a very long duration. There is provision for providing longer term visas to professionals also, particularly in sectors like taxation, architecture, accountancy, and medical field. We have also got good concession in the traditional system of medicine, the Ayushman, the Ayurveda, Unani, Unani Siddha, and the homeopathic system. We have seen that while the same concession has been given by the New Zealand also, but the same agreement is not operational. This agreement is operational, and very soon we'll be getting very expeditious treatment for the India alternative system of medicine in Oman market. The good thing is that for pharma also, the Oman has agreed that in respect of the Indian companies who have US FDO or they have similar recognition in Europe or in UK, they will be provided expeditious clearance within 90 days. And I'm pretty sure that a lot of Indian generics and Indian pharma will enter the Oman market. We also have provided the Oman concession on around 78% of the total tariff line, covering 95% of Oman import. Only in some of the sectors like dairy, tea, coffee, rubber, we have provided them into the exclusion list. In some of the sectors, we have provided the duty-free entry under the TRQ or under the concessional duty. For example, we have allowed Omani dates also to come at zero duty, but the quantity has been fixed at 210. Similarly, we are providing gum, arnica, and frankincense also, which is used in the perfume sector at the zero duty. In petrochemical sector, most of the petrochemical products will come at zero duty, but looking to the domestic sensitivity in some of the petrochemical sector, particularly related to plastic, we have provided them the concessional tariff. Marble blocks also has come under the TRP, where limited quantity of marble block will be allowed at a basic custom duty of 10% and AIDC of 20%. Now, if we look into some of the notifications which have been brought by the DGFT, we have seen there has been change in the policy of export of sugar. The sugar export was restricted, but now the sugar export has been prohibited. Looking into the increase in the price rise on not so good forecast for the monsoon this year, the government has moved cautiously and they put the sugar into the prohibited list of exports. The ban is enacted by the DGFT so that they can control the prices also. However, the exemption has been given for export to EU and US, as we have a quota system working on with these countries. We also have exempted advanced authorization holders because they have already imported the sugar and they have to fulfill their export obligation. And in those cases also where the shipments are in the pipeline, where the cargo has been loaded or vessels have arrived or shipment is under process, they have been allowed for exports. However, the pre-ban commitments have not been honored. So in the cases where the exporter has received the advance payment or he has Irrekul LC opened before the 14th of May, has not been honored, we have already moved to the DGFT to provide some relaxation. We've been given to understand that some of the exporters have already knocked at the door of the courts also, and therefore we have to wait what is the final view of the court in this matter. Even looking into the increasing imports of silver in the country, government has moved to put silver under the restricted list, and therefore silver bars, other silvers under 71069229 is now restricted for import. If you recall that in the financial year 2025-26, we have imported silver of around to the tune of around $12 billion. In the month of April alone, we have seen around 160% growth in the import of silver in value terms, which was putting pressure along with gold on the current account deficit also. Government idea is that with the restriction on import of silver, probably we will be putting lesser pressure on the trade deficit and the current account deficit, which will help us in also checking the sharp fall in the rupee of value as well. DGFT has also issued Public Notice 7. You will recall that the DGFT has allowed the issuance of license on the self-declaration norm, and these ad hoc norms, which were ratified by the norms committee prior to 1st of April 2015. They have been given validity up to 31st of March 2026. But looking into the shortage of the technical manpower at the disposal of the DGFT, they have extended this validity for a further period of the 2 years. So all the ad hoc norms which have been ratified on or after 1st of April 2025, they will now be valid till 31st of March 2028, and therefore exporter may continue to have those norms and operate on those norms for obtaining the advanced license. However, this facility will not be available for the items which are listed under Appendix 4P, or where it has been made very clear that such norms are not applicable for other applications. But barring those, all the norms where the self-declared norms were ratified by the committee prior on or after 1st of April 2015, they will continue to now have the validity up to 31st March 2028, giving much breather to the industry, as the industry was struggling in the fixation of the norms and even the ratification of the self-declared norms. The good thing is that looking into the number of FTA which are being signed, the government is moving towards a self-declaration. So in addition to the existing system of issuance of certificate of origin by authorized agency under the India-UK CETA, the government has invoked the provision of the self-declaration. It will help in the ease of doing business, and probably the industry will be benefited that they can self-declare the certificate of origin rather than getting the certificate of origin from a specified agency, which at times take time. But this will be something which will be extremely beneficial for the companies in times to come. While self-declaration facility has been extended under the India-UK CETA, at the same time, through Public Notice 10, the government has also identified the agencies who will be issuing the preferential certificate of origin under India-UK CETA. DGFT and Export Inspection Council, they can issue the certificate of origin for all the products. That means any exporter can approach DGFT or EIC to get the certificate of origin under India-UK CETA. APIDA, MPIDA, Central Sales Board, Coir Board, Spices Board, Tobacco Board, they can only issue a certificate of origin in respect of product under them. For example, APIDA will be issued for most of the agricultural product, MPIDA for marine product, Central Sales Board for the silk product, Coir Board for coir, Spices Board for spices, and Tobacco Board for the tobacco. Similarly, the Textile Committee has also been nominated as an authorized agency, and they can issue certificate of origin for all apparel and textile products. SEZ authorities are also the notified agencies, and they can issue certificate of origin to the units which are located within the SEZ or EOU which are operating under the jurisdiction. So on the one hand, you have the option to get the certificate of origin from these agencies in respect of India-UK CETA whenever it becomes operational. In addition to that, you will have the facility of self-declaration as well, which is there in terms of Public Notice number 9, dated 11th of May 2026.
Sir, if you can please expand on the PPT, sir. It is showing it small.
It's not showing.
It is not showing full screen, sir.
This fine?
Yeah, now it's okay, sir.
All right, fine. Fine. So we have already talked about Public Notice 10. Now, there has been change in the advance authorization for import of gold. We also seen there has been change in the duty on gold. There has been the change in the policy of the gold also. And looking into huge amount of gold which is coming into the country, which is increasing the trade deficit and putting pressure on the current account deficit, government has brought these changes also. Please recall that in the financial year 2025-26, our import of gold was to the tune of around 72 billion. So out of total import of 775 billion, 72 billion, which is close to 9% was the import of gold. And that has caused huge pressure on the trade deficit also. So under the advance license, the government has put 5 notes. The first note allows only the advance license for the gold for a maximum quantity of 100 kilograms. So gems and jewelry exporters who want the gold for exporting gems and jewelry, they can at best get an advance license for 100 kilograms. However, once they complete the 50% of their export obligation, they get another advanced license up to 100 kg. For the first time applicant, there is a provision for mandatory physical inspection of the manufacturing facility by the DGFT officer. There is a provision for providing a fortnightly performance reports to the regional authority of DGFT, which will have to be certified by the independent chartered accountant, giving the details of gold imports and export undertaken. And there is also provision that the DGFT authority shall submit a consolidated report to the headquarters about the issuance of authorization and the imports and exports effected against such authorization. So in short, the government has definitely regulated the import of gold even for the advance authorization purpose. This may cause some problem to the industry because at times the industry wants to import gold in large quantities so that they can save on the freight also. But now under the new stipulation, they have to restrict their requirement up to 100 kg only. We also see that the government has come with the new TRQ for the raw cane sugar, and this TRQ has been given for around 8,606 metric ton of the raw value of the raw cane, and this is for the TRQ which will operate with respect to the US, and the TRQ is from 1st of October 2025 to 31st of September 2025. Here, the certificate version, if required, will be issued by the additional DGFT Mumbai on the recommendation of APIDA, because APIDA has to certify the agencies who will getting it and the quantity for which they can get the certificate of origin. Any other requirement certification which is required for export to the US for raw cane, that will continue, and the quota will be operated by APIDA New Delhi, as it is the implementing agency for export of TRP to the US. So in a way, the government has allowed export of raw cane sugar for a specified quantity to the US for the year from 1st of October 25 to 30th of September 2026 against a specified certificate of origin, and the quota to be operated by APIDA. There is some of the cases which have been reported in regard to the IEC, because you recall that under the trade notice, DGFT has specified that the pre and post shipment credit given on or after the issuance of UDIN will only be eligible for export credit. It has created problem in the past because many of the exporters have been given the UDIN for the financial year 2025-26 when the scheme was not there. Some of them struggled to get it. This is an issue which was presented by FIEO, and we had a multiple discussion with the DGFT. Finally, the DGFT has agreed that the exporters can get the pre and post shipment credit after 2nd of January 2026, even where the UIN could not be generated by 31st of March 2026. The industry was given time up to 31st of May. So I'm pretty sure that wherever the industry could not get the benefit of the pre and post shipment credit, where they have availed it after 2nd of January, in absence of the UIN, they may have issued the UIN. The good thing is for 2026-27 onwards, it has made it very clear that a UIN can be generated within 15 days of the original disbursement of the export credit. So it is not necessary that you should have UIN when the credit is disbursed, provided within 15 days of the disbursal of credit, you get the UIN. So try to get the UIN as early as possible, but even if you are not getting a UIN when you are getting the credit, you will not be denied the benefit of the interest equalization, provided you get a UIN within 15 days of the disbursal of credit. This applies for the financial year 2026-27. So if in the financial year, assuming you do not have a UIN, you get a credit today, please ensure that within 15 days you get a UIN. Once you get a UIN within 15 days of the disbursal of credit, you will be eligible for the interest equalization. Let me also touch on some of the customs notification also. We have already talked about huge import of gold, which has put pressure. Government has looked into discouraging the import of gold. And for that, the government increased the duty on the gold import, the basic custom duty on gold bullion, silver bullion, gold dore, silver dore, and central metal products of gold and silver. The duty has been increased from 5 to 10%. That means the basic custom duty has been increased from 5 to 10%. There is a new entry which has been created for spent catalyst or ash containing precious metal. There also the duty has been increased to 10%. And this duty will be effective till 31st of March 2027. We have seen that despite having a total import of gold of around $72 billion in financial year 2025-26, even in the month of April, we have seen increase in the import of gold. The quantity of gold import in the month of April went up by around 42%, which prompted the government to look into the various mechanisms of discouraging import of gold. You recall that Prime Minister has also made an appeal, and probably this is the time where we should use our foreign exchange in a judicious manner. This is a sector where probably we can defer the import for some time so that there is not much pressure on the rupee in times to come. Similarly, even the agriculture infrastructure development cess on rupee, on gold with silver has been increased. Earlier, there used to be a social welfare cess that has been abolished on the gold and import, gold and silver import, but at the same time, the AIDC on gold and silver import has been raised to 5%. So the total import duty on gold today is 10% basic custom duty and 5% AIDC. The total import duty comes to 15%. There is an IGST of 3%, but there is a provision for set off of IGST at the subsequent stage of sale. So the net effect of the duty has increased, probably may cause some liquidity challenge to gem and jewelry exporters also. These changes have come into effect from 13th of May. So from 13th of May, we are in a situation where the overall duty on the gold has been significantly increased to 15% now. Even for the gems and jewelry replenishment scheme, the government has tweaked with the duty structure. The customs duty there has also been, which was around 10%. Now the government has custom duty replenishment was 4.3%, which has been raised to 10%. So the basic custom duty since has been raised to 10%. This will result in some of the challenge for bullion import because jewelry exporter would require more liquidity to pay for the duty under these replenishment schemes. So while the government would like the export of gems and jewelry to happen and they are looking into various mechanisms, but at the same time, the increase in the duty on these particular import of gold and silver is likely to put some pressure on the liquidity of gold and jewelry exporters. Now, if you look into the situation, earlier we have a total duty of 6% on gold before 30th of May. The basic custom duty was 5%, which has gone up to 10%. AIDC was 1%, which has gone to 5%, and therefore the effective duty, which was 6%, has moved to 15%. There is no change in the IGST. The 3% IGST remains the same in both the cases, and there is complete set off of IGST, which is paid at the time before, at the subsequent sale also. Now, India has also looked into the India-UAE CEPA because under the India-UAE CEPA, we are allowing certain quantities of gold to come under the TRP. 200 metric tons of gold is allowed under the TRP, where the earlier the basic customs duty was 6.6%. The government has raised that to 10%, and the AIDC, which was 2.5%, that has been raised to 4%. So even the gold which is coming from through India-UAE CEPA, we are seeing the increase in the tariff. The tariff earlier was around 9.1%, which has gone to 14%. But as you can see here, the AIDC, which is 5% otherwise, but for import under India-UAE CEPA, there is an advantage of 1%. So that situation remains the same. So why 1% advantage continues for import under India-UAE CEPA, but the net incidence of duty has gone up from 9.1% to 14%. You may recall that looking into the increase in the price of the cotton, the textile industry has made it clear that government should allow the duty-free import of cotton. Government has looked into the demand and they have struck the balance between the requirement of industry and the farmers, and therefore, for the off-season period, which is from 1st of June to 31st of October, government has allowed import of cotton without duty. So now you can import cotton without duty. There is complete exemption from basic custom duty and also from the AIDC. But this is for a limited period of 4 months. After October, probably the cotton crop will be available, and government want the farmer should also get a reasonable price on that. And that this window may not operate after 31st of October 2026, as Indian cotton crop will be available in the market thereafter. The government has also looked into the expeditious clearance of the hazardous cargo, and therefore the government has got the circular number 24, where they have said that it is mandatory to declare the hazardous cargo in the bill of entry. What are the hazardous cargo? The circular has provided detail in the annexure A. So if your product is falling in annexure A, it will come under the hazardous cargo, and you have to declare it in the bill of entry. And such bill of entry will be flagged to the officers also for expeditious clearance. At the time of assessment, examination, or of charge, this will be displayed in the customs system so that the entire process can be expedited. This will come into force from 1st of July 2026, and NCTC will make suitable modification in RMF so that these goods can be identified and they are provided better facilitation. The short point is there that for hazardous cargo, government wants that hazardous cargo should not be at the port or in the customs location, and they should be cleared as early as possible, and therefore the industry has to come forward to provide their declaration about these cargo in the bill of entry, and thereafter the system will reflect them at every stage of processing so that customs can also clear these cargo very quickly. There are two other important circulars which has been brought by the Department of Revenue. One is regarding the extension of validity of various circulars which have been issued in the past. Looking into the challenge in the state of hormone, we have seen that the government has extended many facilitations from time to time, including back to town cargo, including the waiver of amendment and cancellation fee. For the SCZ also, they have allowed these kinds of changes. These circulars which have been issued in the past had the validity only up to 30th of April. But looking into the challenges of the state of commerce, government has extended the validity of all these circulars till 30th of June 2026 by circular number 25 by 2026. Similarly, the government has clarified that for any inward and sailing out, which is provided through the sea arrival manifest and the sea departure manifest, there is no need for a physical boarding of the customs officer on the vessel, though there was some view that as per the provision of the Act, the custom officer should physically board the vessel, but the board has clarified that it is not required. Only when there is some risk profiling of the vessel, the custom is required to physically board the vessel. Else, based on the sea arrival manifest or the sea departure manifest, the ships can come inwardly and ship can sail outwards. So these are in short all the developments which have happened in the month of May, which we want to share. And now we will open the floor for any clarification or any question. Thank you.
Thank you so much, sir. I would request participants, if you have any queries, please use the raise hand option under the React tab, and I'll unmute you accordingly. You can please raise your hands. Yes, sir, please unmute Mr. Arun Sahu.
Good evening, sir.
Good evening.
Sir, actually, I had made a point like, we are a AO T2 holders and we have applied for renewal of this T2.
Yeah.
Right now it is expiring on mid of July, but I don't think I will get it before that because my physical verification, plant verification is pending. So
Okay.
to to avail the deferred duty, can I apply on eligible importers? Right now there is a scheme, right, for
Yeah.
eligible importer. So can I
That's it.
apply under that scheme to get the deferred duty benefit?
If you are eligible under the eligible importer scheme, apply under the eligible exporter. Srinath, I read somewhere that they are saying that if you have applied for the renewal of AEO and it is pending, the benefit will continue to flow to the industry.
To a certain extent, sir, but they say that after the cutoff date, it will not be extended as much. Because suppose he's saying July 31st, so then he has to apply early and
No, he has already
afterwards-
applied. That was I didn't understand. Mr. Sahu, have you
Yeah, yeah.
applied?
Yeah, we have applied and physical verification, plant verification is pending from that side, Ahmedabad Customs.
Okay. So
So,
do one thing. Still, you have 2 months time. If you can share the details with us, we will try to expedite the plant verification so that you get
okay.
in time.
Thank you,
Okay.
sir. And I
Please
mean,
share with
do
my
you,
colleague, Mr. Shida.
still do you advise me to apply for eligible manufacturers in the meantime?
I think wait for 30 days. We are hoping that within 30 days we will be able to break through. If this
Right.
is not happening, you still have a month to go thereafter.
Okay. Thank you very
Okay.
much.
Thank you.
Mr. Chandrasekhar, sir, please unmute yourself.
Sir, good evening, sir.
Good evening.
I am new startup company, sir. Actually,
Okay.
it's a private limited company. Export, sir. Yes, sir. Yeah. So what happened? GST return, monthly I'm filing that. So it is not getting transmitted into ICE gate, sir. So
No, no.
whenever I'm filing
Please,
at the
I
GST,
lost you. I lost you somewhere. Can you repeat your question?
sir, it is a new startup company.
Okay.
So I have incorporated this company is 2018, but after that I have not done anything. So
Okay.
now the company has been activated.
Okay.
Now I've enrolled in the ICE gate as well. But while filing the GSTR
Okay.
returns, GSTR 3B and all, so I'm getting automatic mail from ICE gate stating that your this thing has been not transmitted. So it is asking for that KYC authentication and all, but we are unable to do. To whom I need to contact, sir?
sir, they need to contact the IceGate help desk. And sir, when you are registering for IceGate, please remember that your IC and all the details will be auto-populated, and you will be given a choice from your GST as well as IC of the mobile numbers that you wish to load as a parent in this thing. Now, that is a choice that you will have to seek. Sometimes companies have GST departments as well as export departments, which are different. So please choose one mobile number, and you will be automatically registered with IceGate and as well as linked to the GST.
Fine, sir. Okay, sir. Thank you, sir.
Thank you.
Mr. Vijayan, sir, please unmute.
Yeah. Hello, sir. Good evening. I'm Vijendra Sindol from Vikarabad Pulp and Paper Mills. We manufacture cotton linter pulp.
Okay.
So recently we got an order for export, but when we saw our product is banned, I don't know how, last 2 years we were exporting. But this year from there was a notification number 50, which was given in 13 January 2025. So this
50
actually
of what? DGFT notification or what notification?
DGFT. Actually, this product is cotton linter pulp, which is connected to cotton.
Okay.
Whereas our HSN code is 4706-1000.
Okay.
Chapter. The chapter
406 can't be cotton until then.
This is cotton linter, sir. We produce from last 30 years. We are producing this.
No. What is banned?
Cotton linter pulp is this is manufactured from raw cotton linters, which we procure from cotton oil mill. It's
Cotton
called,
lintel, what is the HS code of the cotton lintel?
yeah, 1 second. You're talking about cotton lintel, right?
Yeah.
HSN code 4706-1000.
Okay. And what DGFT has banned is this product.
Yeah, they are prohibited.
Okay. And what you are exporting?
We are not able to export. We want to export cotton lintel pearl, which is prohibited.
No, if it is prohibited, then you can't export it. It's prohibited or restricted?
Prohibited. This was actually this was done in 2005, 2004, 2003, we exported.
Sir, I have checked this, sir. This is when it was aligned with the second schedule. It
Yeah.
came as prohibited, sir. Is that right, sir?
Right.
But no, what is when the HS code were transmitted, the transfer, then this problem has arisen, or they have a specific notification?
There was a specific notification, trade notice number 11.
Okay.
So please read the heading of the notice. Please read the heading.
Wait once. Sure. Trade notification number 11, 2024, 2024-25. The dated was 2nd August 2024.
Okay.
This is harmonization of Chapter 4298 of Schedule 2 Export Policy to ITC HS codes.
Okay. Have you represented when this change happened?
I didn't get you, sir.
They have
Have you
represented.
represented when this change happened?
No, we didn't know all this happening.
Okay. Can you look into the classification at the custom site? What exactly is the classification? Because when this kind of transition has happened, at times they have wrongly classified the product or its exportability, importability. That's why I've asked whether it's a part of the transition or not. So what I will request, please send a detailed mail to us. Let us examine the issue. If it is just inadvertent mistake by the DGFT for classifying it under the prohibited while they are doing this kind of migration, we'll take it up. If there is a conscious policy, we will also let you know.
Sir, we are sending the mails from last 15-20 days, and I have put a query in DGFT also in October, November, and we met Lokesh sir also.
Okay, what is it?
He said, yeah, that has been mistakenly, maybe that is mistakenly happened, or we'll look into that, he said.
All right. Have you shared your mail with my colleagues also?
Can I get the mail ID so I can just...
Yes, I have received it from Kulkarni, sir. I'm following it up with DGFT.
Okay, you have received it. Fine. So Mr. Srinath will revert back to you. My Hyderabad office has forwarded the mail and we are taking it up.
Okay.
Fine.
How can, when, any timeline that we can...
I'm not deciding on the matter. I'm simply facilitating. We'll try to push as much as possible.
Okay.
But within a fortnight, we will revert back to you.
Yeah, but so this happens. See, we have been approved by 2-3 buyers, and they are giving us order. They are ready to place an order 250 tons per month.
I entirely agree with you. Let us try to expedite, because if location also said that it may be an inadvertent mistake, we'll try to get the issue resolved quickly. But I'm not giving a time frame because it is to be done by the DGFT, not by FIEO.
Okay. Sir.
Okay.
Thank you.
Thank you.
Thank you, sir. Mr. Satish, please unmute.
I'm Sivakumar along with Mr. Satish. We are exporters for last 3 decades. We are a 3-star export house.
Yes,
Suddenly there was a very abrupt ban on sugar export by DGFT, which really crippled our business. Our firm supports so many hundreds of people, and we are in sugar trade for more than 2 decades, my dear sir. What happened is that we have entered into one contract with one sugar mill for export under the government quota, and we have signed that agreement on the government stamp paper. And we have moved the cargo also about 810 tons to Mumbai warehouse. And being one three-star export house, we have that e-sealing facility also. All of a sudden, like a bolt from the blue, government has banned the sugar export, and now our sugar stock is stuck up everywhere, sir. It's about 3.5 crore rupees, and being one exporter to have this money blocked for so many days, and no clue when the government will release the export, we are in real tight spot, my dear sir. So I would request your.
I understand your problem and I appreciate that also. Sir, in the past also when this kind of ban came, subsequently Department of Consumer Affairs, based on the request made by the mills, provided some relaxation. So my request to you would be that please ask the mill with whom you have the contract, they should write to Ministry of Consumer Affairs, because I have come across a notification where they provided some relaxation last time also when the ban has happened. We on our own has also taken up with the DTFT, and I told you there are few companies who have gone to the High Court also seeking a relief into that matter. But I will not request you to move to the court. My request to you will be please get in touch with the mill with whom you have the contract, because probably Ministry of Consumer Affairs may not entertain, but they may entertain the mills also. Last time when they provided the relaxation detailing the mills with whom this kind of relaxation will apply. Please bear in mind that this has been done because the sugar prices have moved little bit. It was during the election period, and we have still some uncertainty on the monsoon. So that's the logic, but we are completely with you. There should be reasonable time for the industry whenever a ban is brought into force, which has not been done. At this time, I will request you to kindly follow with the ship mill, and if mill can write to the Ministry of Consumer Affairs, relaxation is possible by them.
So nice, Honorable Sir. Say, can I write to the Consumer Affairs directly, because going through the mail it takes time.
You
We are
can
in
do
Chennai.
it, but when I looked into the relaxation which has been provided last time, this was relaxation which has been given to the sugar mills rather than to the exporters. But there's no problem. You want to write it directly, you can try and write to them directly also. I will share the exemption which was provided by Ministry of Consumer. Please leave your email address with us. I will share just after this chat is over. I will share the exemption which was provided by Ministry of Consumer Affairs.
So nice of you, my dear sir. Thank you very much, sir. Thank you very much.
Thank you.
Thank you, sir. Mr. Raghu S., please unmute.
Sir, good evening. We want to understand about India-UK FTA. From when it is inactive, when we can start approaching the certificate of origin.
The government was very confident that we may probably finalize the operation of this FTA by the end of May. It has not happened. You must have seen that UK has increased the safeguard duty on India's steel also. India is also looking into what kind of concession which can be withdrawn so that whatever loss happens to export of steel, that can be offsetted by something. Therefore, in the given situation, it's very difficult, because unless these issues are resolved, probably the other house of the UK Parliament may not ratify that. So, to me, at this point of time, we have to wait for some more time. Once these issues are sorted out, what I've been given to understand that probably the negotiation is getting reopened. If India can get some relaxation on the steel as well as on the CBAM, this is something which CBAM is of course not with the UK in particular, because UK also it has come. So this is the relaxation which India is seeking, and therefore at this point of time we have to wait for some more time.
So in principle, it is still not been implemented.
No.
Okay, thank you.
Priyadarshini, please unmute.
Yeah. Hi, sir. Sir, I'm a new exporter and I'm willing to export spices from here to. So
A
it is
bit louder, Miss Ruth. A bit louder, please.
Okay. So, am I audible now? Am I audible, sir?
Yeah,
Yes.
now better.
Okay, so actually, I'm a new exporter. I'm planning to export spices from India to Saudi Gulf countries, and the buyer is looking for the port of Dammam port or Jebel Ali port. So, what I would like to know is whether it is accessible now, or is it advisable to proceed further? Because when I reached, many of the CHAs are telling it is stopped now. So, is it true, or how to proceed or not to proceed? Can you guide me, sir?
No, in fact, what I've been given to understand that while large shipping lines are not operating the route, but a lot of Indian flag vessels have started operating on the route, and cargo is not going, and this is clearly reflected that India's export decline to West Asia and Middle East is gradually coming down. So my advice will be look into somebody who can provide you the complete delivery mechanism. Just don't look for a shipping company. Look for someone who can get the cargo at any of the port, maybe Sharjah, maybe any other port, and then from there through landlock method, they can deliver at the destination also. So look into some freight forwarder who can provide you the facility of ships also as well as movement on the road as well.
Okay. Do we have any government no assistance on this particular freight forwarders at current situation?
No, as of now, I'm not sure, though Shipping Corporation of India and some Indian flag vessels are operating. But probably you have to talk to Shipping Corporation of India if they have any sailing in short time to come. There was a proposal by Shipping Corporation of India to start the regular service. They were looking into the two ship. One is a 1,000 TEU ship, other was a 4,000 TEU ship. But that was the pilot which was supposed to be start, but I'm not sure on that.
Okay.
Thank you,
Okay,
ma'am.
sir.
Miss Surinder Sahu, sir, please unmute. Sir, are you able to unmute? Yes, sir.
Yes, ma'am. Yes, ma'am. My question is India UK SETA sector, when it will be started?
Sir, as I told to the earlier speaker, there are still some issues which have been reopened for the negotiation because UK has increased the safeguard duty on India's steel, and therefore government is looking into also providing some less less tariff advantage to some of the sector. You must have seen that they are also looking into reviewing the tariff concession given to the Scotch in the US. So if these issues have been reopened, we have to wait for some more time. Otherwise, I was given to understand that the both houses of the UK Parliament are supposed to ratify it quickly. But in the given situation, unless these issues are resolved, it won't be possible to get the ratification.
Okay, sir. Okay, sir. Noted. And India Oman FTA is already applicable
Operational. It is operational from both the sides.
from 1st of June.
From 1st of June. From yesterday, it has come into operation.
Okay, sir. Okay. Then further shipment, we can issue the preferential certificate for
Yes.
Oman. Okay.
Yeah.
Thank you. Thank you.
Thank you, sir. Mr. Vijay, sir, please unmute.
Yeah.
Sir,
Good
there's
evening,
some.
Mr. Sai. Yeah, my query is
Sir, you are not properly audible. There is
with regard to
issue.
TMA. TMA, this court orders. Hello.
सर आपकी लाइन
You
डिस्टर्ब
can
आ
listen
रही है
me? Hello.
Sir,
आपकी
there is
लाइन
a
डिस्टर्ब आ
network
रही है
issue.
Yeah, my query is with regard to recent court orders. So when can we expect the government to open this online? I'll put the query on the chat.
No, I got the point that you are talking about the TMA scheme. When the TMA scheme was withdrawn, the government has definitely said they will be coming with the revised scheme. we followed the matter, but as of now, there is nothing on record which says that they are reviving the scheme. So from our end, unless suitable budget is given, they won't be able to revive the scheme.
I want to talk about this basically recent court orders with regard to that.
So if there is court order, definitely if government is not going into the appeal, they will honor those court orders.
Okay. So with the court order, on basis of the court orders, will the government open for the online process, or it will be a kind of offline application for 2021?
It has to be an online process, because if it is an offline process, I'm not sure, because in this case of TMA, the direct fund has to move to the banks only. So I'm not sure whether they will go for an online process or the offline process. But first of all, they have to take a call. They're not going into the appeal. If they're not going into the appeal, they will be under the court verdict.
Because as per the court order, it was given within 12 weeks, the government has to offer this TMS payment and all.
So that's why at times the government, of course, move to the court, get a little more time. So first of all, I'm not sure whether the government is going into appeal or not. If it is decided not to go into the appeal, they will find some mechanism to provide you the TMA benefit.
So it's better for us to wait for that final decision.
Yeah, that's true. Wait for.
Thank you. Thank you, sir.
Thank you, sir. Mr. Manish, sir, please unmute. Mr. Manish Uskania. Yes, sir.
Good evening, sir. This is Manish from ZA Seafood, sir. So
yes,
basically, exporters of marine product. And sir, recently we have imported one machine from China. This is an automatic packing, sealing, and weighing machine, sir. So this machine is particularly dedicated for our own internal in-house packing and sealing, and those products will be ultimately sold out in export form. So recently, sir, we came to know from our CHA that few certificates are required for this machine, like LMPC certificate, plastic EPR, and BIS certificate. So we have applied for these first two certificates, but sir, BIS certificates is basically required. Not required by us, since we are not again going to resell this machine, and it is dedicatedly used for our own in-house packing machine. So now, sir, the cost for this certificate is around 8 to 10 lakhs. And one of our CHA is saying that you have to get this certificate. Other CHA is saying that you are not required to get this certificate, sir, under the HS code of the machine what we are importing, sir. So we need your guidance for this, sir. Shall we write?
Whether it is required or not, my request to you is to go to the BIS website and see whether it's required or not required. If it is required, it is not by you. It is probably the supplier who has to get the BIS registration, because you are the user. It is not for the BIS, not for the user. BIS for the manufacturer. So if that be the case, probably your Chinese supplier has to get the BIS. So let us first get the facts correct. Go to the BIS website and see whether this is required or not required. If it is required, probably you have to request the Chinese manufacturer to apply for the BIS, whether they will be interested or not. If they are not seeing India as a big market, they may not be interested. And therefore, probably we have to look into, you have already imported or it is yet not been clear?
It is already imported and it has reached our port, sir.
Anyway, first see whether it's required or not. Please share the HS code with us also. We will also try to help you out to see whether it's required or it's not required.
Okay, sir. Sure, sir. Thank you so much, sir.
Thank you, sir. Mr. Akshar, please unmute.
Good evening, sir. My question is, we are currently, I am trying to export my first shipment. Right now, I don't have any active buyer, but I want to ask you that I am dealing in onion powder, banana powder, and beetroot powder and moringa powder. If I getting onion powder order for 40 feet container, so it would be cost around 35 to 40 lakhs. If I have a purchase order from buyer, so how much loan I can get from bank against 30 lakh? Or it is a bank specific or any government subsidy I can get?
No, the point is that, first of all, how much credit you require has to be adjusted by the bank. Bank will decide how much credit needs to be given to you. Bank will also assess the rate of credit. If you are using it for export, you have the interest subvention scheme where you can get a interest subvention of around 2.75. Assuming the bank decide that you require 50 lakhs of credit at 9%, you will get at 2.75% less for export under the interest equalization scheme. So please look into the detail. How much credit you will get will depend on the assessment of the bank. What is your requirement?
Sir, if I have a confirm purchase order, so in this case, a bank can deny for loan, or they will definitely give me loan.
So I'm not sure whether they will deny or not deny. First of all, how much is your requirement of loan? Because you have an order of 40 lakhs. I don't know how much money you require for raw material or for logistics or for the labor. So that's a call which the bank will take. Whether bank requires collateral or not depends on which scheme you are applying and what is your credit worthiness. So these are the tasks which is a general task of the bank for granting any loan. The short point which I am making is, since you are requiring the loan for export, there is a scheme by the DGFT which provides you some kind of subsidy where your interest burden is reduced by around 2.75%. You can avail that.
Okay, sir. Thank you.
Thank you.
Do we have any other queries, please? Yes, Mr. Jaya. So please unmute. Yes, sir, please go on.
Hello, I'm audible?
Yes.
Yeah. I'm Jay from Gujarat and I am dealing in packaging material.
So you're not audible to us.
And FIEO is right now. Is there any next? Even I get one of the order from. Hello, can I now audible?
Yes, yes.
Yeah, like I have a question. FIEO is inviting international buyers at reverse buyer seller meeting, right? Is there any next event where FIEO is inviting the buyers?
So we have a number of events in the different states. We have one which is coming in Gujarat, which is probably 29th, 30th of June. We have one which is coming in Maharashtra, probably which is next month. We have one event which is coming in Srinagar, which is also on 19th and 20th of June. So based on the request of the state government, we are organizing these reverse buyer seller meet. And generally we invite the buyer of the sector which is identified by the respective states.
Okay, thank you.
Thank you.
Thank you, sir. Mr. Mohitendra, so please unmute. So I think there is some network issue on his. So are you able to unmute?
Yes, now I'm able to.
Yes.
Okay, so last week we had this meeting and we were told that the presentation, the PPT file would be shared, which weren't shared till now. And it's regarding that only, regarding the PPT. And sir was talking about.
Just a minute. Shinad, we have shared the presentation. Why we have not shared with this individual?
सर ईपीएम हिंदी का प्रेजेंटेशन जो है मोइन सर से हमने रिक्वेस्ट करी है, इट इज येट टू कम.
की बात कर रहे हैं आप? Okay.
जी.
Mr. Mohiten, the problem is that whosoever is the speaker, he has to take a call whether the presentation has to be made public or not. Since the presentation was made by the officer of the DGFT, we require his permission before we share it.
I understand, but during the meeting, it was clearly told that we will share the presentation.
But sir, वो
So that's
YouTube
why
में
I'm a
already
bit
है,
confused.
All
आप
right,
एक बार
fine.
YouTube
We'll
देख
sort it out. We'll sort it out. Srinath, just speak. I think he should not have much problem, but just speak to him before you share it.
I'll do that, sir. We'll do that.
Sir, and the recording is available on YouTube. You can go to FIEO YouTube page. You will get the recording of EPM session.
All right, good.
Yes.
Sure. And one more thing, so we were talking about CBAM regarding last week also when I spoke, I said something about CBAM that regarding CBAM regulations, what help can we get as manufacturers? So
Which is the
it was
sector
told that
which is the sector? What is your export product?
we manufacture and export welded mesh panels. Okay, so our HSN code is 773143900.
Okay. So right now you are not directly covered under the CBAM, but if there is any carbon emission which is happening in the steel manufacturing and you are using the steel to that extent, you may get impacted. So as of now, the CBAM is only covering few sectors, but over a period of time, they are likely to be extended to a lot of sectors, including the end product. So at that stage, probably you will be covered. As of now, the end products are not getting covered.
No, I understand, but it would be implemented from next year's February 2027. And we already know that we are already in the list. Okay, that whatever products we are manufacturing, we are already in the list. We already have spoken to n number of people from Europe as well as from agencies from here, those who are working on CBAM, and we are already in the list. So the thing is, what I am concerned about that are we going to get any sort of help from the government? Because once this gets implemented, a lot of exporters from India are going to get stuck. Okay, so all these FTAs are not going to work because if we are not allowed to ship our products and if they are getting blocked at the port, whether it's the port of origin or whether the port of discharge, doesn't matter. But we would be stuck. We won't be able to export materials. So is the government is going to take any step? Even if the FTA is there, FTA is not going to help. So what steps can the government take? What help can we get?
Please bear in mind, FTA has nothing to do with the market access, only provided you tariff advantage. So you are right, FTA will not help. As of now, the government thinking is that since these are the equalization levy, whether we can impose the equalization levy in our own country so that the advantage comes to the government only rather than European Union or UK collecting the duty on your behalf. To what extent government will provide support or subsidy for that, I think we have to wait for some more time before that is finalized. Because as of now, there is nothing which shows that government is going to provide some support to those who are impacted by the CBAM.
Understood. Thank you, sir. Thank you for that.
Thank you, sir. Sudeshna, please unmute.
Can you hear me, ma'am?
Yeah, you're audible.
Okay. My name is Sudeshna Honale, founder of Rajdeep Commercial Enterprise. I have two questions. One question is, I have an order from Iraq. I need to I need to the port. I'm going to operate between the Navasheva and Qasr. So I want to know the operation of this route is started or not, and where I will get the information. All this about the route, ship routes. Any specific organization?
You need to talk to some freight forwarder. They will definitely brief you on that. What I've been given to understand that small ships are operating on this route. Whether they are going up to the end point, I'm not sure. Most of them, they were basically discharging the cargo either at Fujairah or at Sharjah. Some of them are going to Oman also because Sohar and other ports are also being used. So please talk to the freight forwarder whether you have a direct sailing to the destination. If that is not, whether they have the arrangement where cargo can be picked by them or a third party and delivered at the destination. So I think freight forwarder will be the best person to provide these details to you.
Okay, sir. And second question is, I am a registered to Spice Board, since 2 years back. The way I do file returns on the website, and I want to know, is it similar to EPEDA? I have recently took the RCMC of EPEDA. So, is there a similar pattern that I have to, file the return files, because I'm
No,
not getting my.
I have no idea what is the mechanism. I believe that if the return is filed at the eConnect portal, then probably the mechanism should be the same, because DGFT may have standardized the format. Where are you supposed to file the return? It is on the eConnect portal or somewhere else?
eConnect portal of Spice Board.
I hope that they should have a standard form, but I'm not sure. I have not gone through those forms.
Okay, sir. Okay, sir. Thank you, sir. Thank you, sir.
Anyone have any queries, please? Sunita, unmute, ma'am, please.
Hi, sir. Good evening, sir. We registered as a merchant exporter. Okay, and I have APADA RCMC, and also I registered in FIEO as multi-product exporter. So, suppose I would like to export other than APADA products like coffee and spices. If I can I go with the FIEO RCMC, or there is a need to take compulsory Spice Board RCMC and Coffee Board?
No, Coffee Board RCMC is not mandatory, but Spice Board RCMC is mandatory for export of spices from India. So if you want to export the spices, you have to have an RCMC for spices board only. For coffee, you are not required. If the coffee is added in your RCMC of FIEO, you can export.
Okay, okay. Suppose if I would like to export some brass crafts, handicrafts also, can I go with FIEO?
You can.
Okay, okay. For a spice board only, we have to take
Yes,
compulsory.
because that's part of the export policy. For export of any spice, you require registration with the spices board.
DG sir, I'm Kushwan Jain.
Yes, sir.
Regarding Spice Board and APEDA, it's a
Yeah.
compulsory RCMC required for all the spices which is you are exporting from India, as well as the APEDA scheduled product. You have to take the RCMC from Spice Board as well as the APEDA, what the scheduled product they have. Monthly return is compulsory in Spice Board as well as the APEDA. They have their own website where they have the section to be filed the monthly return of your turnover, which is last two question people have asked, which is the mandatory.
Okay, so it's not in the eConnect, it is in their respective portal.
Yes, they have the Spice Board have their own portal as well as the APEDA have their own portal to file the monthly return.
Thank you, sir, because she was saying that eConnect portal. Fine, sir. Thank you, sir.
Thank you, sir.
Right.
Thanks.
Thank you, sir.
Rohani, if there are no more questions, then
Yes, sir. Yes, I don't think there are any further questions. But thank you so much, sir, for your presentation in time. I hope it helps all the participants. And the PPT will be shared to all the participants.
Thank you. Thank you. Thank you.
Thank you so much, sir. I've also given the email IDs in the chat box of the policy team. You can please share your concerns on email also. Thank you, Srinath sir, for your time and coordination. Thank you.
this will be held again next Tuesday, next month of the first Tuesday of next month, which may please be noted. Thank you.
Thank you to all the participants.